Bitcoin is ripping while stocks are dipping. So let's jump in, take a look at what's going on. The market's been a little off the last few days since my last video, kind of at that point where markets tend to reverse, if not just a correction, then for a deeper bear market pullback. So we'll take a look at that in a second. The Dow down to about 0.5. It was down much earlier, a lot more much earlier. It's about 2 p.m. Eastern Standard. So a couple hours left to go to the close. We'll see how the market closes. That's always a good indication of investor sentiment. Down 0.5 on the Dow, 0.5 on the S&P, 0.6 on the NASDAQ after several really good days of rally. So let's jump in, take a look at what's going on. Bitcoin has the news right now in this longer rising channel where the upper range could come in around 35,000. Peaking out about where it was back in May, if it did run into that upper range. So let's take a look at something here that's interesting. If you look at a retracement from this last high here to the low that was put in back in September, October, the 0.5 comes in right at around 31.9, 32K, the 618 right around 35, and the 702 right around 38. Which is a good area in terms of, looking for more downside or reversals. If you take the entire move and plot that, it looks like right now just above the 236 headed to the 382, which would be around 35,000. A 0.5 retracement on the overall bear market move would put it back at 41,000. 618 would be around 48,006. So it'll be interesting to kind of watch, see how Bitcoin responds as it nears the upper end of this channel. And, what is really driving this? Of course, the news with BlackRock. Some news came out about another leveraged ETF that was approved, Bitcoin futures ETF that was approved. It's a leveraged Bitcoin futures that starts trading on Tuesday. The volatility shares 2x Bitcoin strategy ETF, BITX, will become the first leveraged crypto ETF available in the United States after the Securities and Exchange Commission let it go effective on Friday. An executive at the company told CoinDesk the regulator has not denied the application for the 2x ETF volatility shares. It's exciting to see digital assets in the ETF wrapper. So this is leading a lot of speculation that these other spot ETF applications will get approved. Of course, nothing in the news on that right now, but that is leading market to participants, market makers, and exchanges to kind of drive the price on that news. Also with this news here about the SEC, or not SEC, but Coinbase with a Supreme Court victory in the arbitration case. That's leaving a lot of people to believe that Coinbase is going to prevail in their case against the SEC. But the victory that they walked away with was the result of a class action suit by some of its customers that wanted to skip arbitration, and Coinbase won the right for that to go straight to arbitration. So the rule of law sometimes slow and at times disappointing, but it remains our last best hope in an imperfect democracy. Basically, this was argued back in March and as part of the October 2022-2023 Supreme Court term. So Coinbase's issue was it's a lawsuit to allow Coinbase to halt customer lawsuits while the crypto company moves them out of the court and into private arbitration. So that is a victory for Coinbase on that issue, but it has nothing to do with any pending or current issues. So, a lot of bullish momentum and excitement in the markets, interpreting that as a win potentially for Coinbase against the SEC. And one of the things to kind of think about is, potentially a lot of little, behind the door conversations and speculation and conspiracy thoughts. And if the SEC, Gary Gensler said himself, we do not need another digital currency. We have the dollar, we have the yen, the yuan, we have all these other currencies that, euro, that are already transferred digitally around the world. So if he really truly wants to shut down crypto, what's the best way to do that? He knows he can't stop Bitcoin, but if he doesn't want all of these altcoin tokens, what's the best way to shut it down? Go after the exchanges, take away the ability to trade the tokens, the instruments, from the general public in the United States. So you start with the exchanges because there are thousands of tokens. So it'd be virtually impossible for them to go after all of the companies, the projects, the protocols, the tokens themselves. So you go after the medium, of exchange for those tokens. So you start with that and go after the exchanges. Once the exchanges are brought down, then, if you're successful there, then you open up the door for Bitcoin to become more mainstream and more people to be likely to trade that asset, potentially Ethereum. We'll see how that shakes out. And with the traditional, firms coming into the picture like BlackRock and Valkyrie and Willow Tree and ARK and all the others, Grayscale, that are and have been trying to get a spot ETF in place, that could kind of pave the way for broad scale exposure to the average investor around the country. 12% of the households in the country own ETFs. So if now Bitcoin is allowed to be traded as a spot ETF, again, it wouldn't be those companies owning Bitcoin. BlackRock wouldn't own it. Valkyrie wouldn't own it. All of the companies that are filing ETFs, they're filing trusts. So the trust would own the Bitcoin. The investors own the shares of the ETF. So essentially the investors own the Bitcoin, not the companies that are filing and managing and running the ETFs. They're earning fees. That's why they're doing it. And one of the reasons that would be huge for Bitcoin and for the price, obviously broad scale, adoption, where the average investor now with a TD Ameritrade account, Fidelity account, any Robinhood, any of the typical trading accounts would now be able to trade basically spot Bitcoin, essentially, or have exposure to it, as that is what the ETF would trade. It would trade in relation, just like GBTC, just like MicroStrategy, and any of these other companies that are tied to Bitcoin and have Bitcoin exposure. ETFs are a little bit different, or the futures are a little bit different. They don't always necessarily track price action, but sometimes they can. So we'll see how that shakes out. But that would be a big thing for Bitcoin. It would be more broad scale adoption of the general exposure to the space, not direct ownership, not what Bitcoin was originally created for, what it was meant to be used for, but it brings more people into the space in general, which then creates more general broad scale adoption. And once ownership of spot, custody of spot becomes more mainstream, easier, where it's simplified, you don't have to worry about keys, you don't have to worry about all that kind of stuff, and it's much easier, safer for the average individual that is not tech savvy at all to own and store Bitcoin. That's when you'll reach broad scale adoption and usage of Bitcoin potentially down the road. So these are just little steps along the way. And if you had somebody in a regulator like Gary Gensler who wanted to move more towards that direction and away from altcoins and the casino that's been, which the stock market's a casino as well. What better way than to go after the exchanges, take away the individual's ability to trade those assets, and the company's ability to issue those assets to the general public in the United States, and then backdoor TradFi in to then increase Bitcoin adoption and trading. So those are my thoughts on the BlackRock and the ETF situations that are going on. Right now, Bitcoin kind of maxing out at this 31,000 range here. A lot of resistance in this area. So would have to flip this resistance to continue on for there. Right now, just the bullish narrative momentum going on here. Obviously, we know that this is not general retail jumping in here, that it could be capital rotation. The markets are taking a break here lately. Here's the Dow, and we've been charting these moves, rejecting on the 702. It's been reversing ever since then, found support at the 618, now rejecting the 618. Next stop is the 0.5. So if this momentum continues, that's your next stop, just like we saw in May of 2023. Right now, the NASDAQ is the strongest horse in the race, holding up at the 702. If it can maintain that level, then next charge will be the 786 to get through. S&P rejected on the 702, working its way back down to the 618. So this right now is just a healthy correction in a general bullish trend. It's not a bull market yet. In terms of the traditional sense, right now this is unless otherwise proven otherwise, bear market rally. Once it clears those levels, 702, 786, then you can start looking at bull market on. And a lot of momentum, a lot of capital, but these chips can be taken off the table, rotating back into Bitcoin. You could have some of that going on because Bitcoin has been lagging this move in the overall indexes. Right now, the S&P up about, let's see, on this latest move, about 27%. The NASDAQ, the biggest gainer on this last recent leg here from the October lows, up 45%. The Dow Jones up on these moves overall 20%, whereas Bitcoin now outperforming the indexes, not a lot of individual stocks necessarily, as we've seen a lot of 3 and 4Xs on individual stocks, but basically outperforming the indexes, up 100% now since, well, at the peak at 31,003, it was up 100% from that November of 2022 low. So a nice little run here. The question is, can Bitcoin hang on? Will it roll back over and retest these lower ranges and get into a deeper retracement? So this ETF narrative definitely brought a lot of bullish momentum into the space. A lot of people have been looking at dominance, again, on the rise. Some people targeting that 60+% range for dominance. That just means obviously Bitcoin's running, altcoins are lagging behind. Although some of the altcoins are up a little bit, nowhere near keeping pace with Bitcoin. And of course, we'll see all of this momentum taper off and reverse once the news settles in. And if for some reason one of the, if the ETFs get denied, that'll take a little bit of the wind out of the sails of this move. But I think right now, given the momentum in the market, if there is potential for a spot ETF that will keep momentum going to where I think, unless some major market incident happens, that we can look at the lows for the market as being in, at least for Bitcoin. Ethereum could still potentially revert to the mean back down to that $400 level if you have a market incident, as could the total crypto market in whole. Still never retraced a full 90% like it does and has in previous bear markets. So that's just something to keep an eye on. So that's what I'm looking at right now on the charts. And we will just have to keep our eyes peeled and see how these things play out. If these ETFs can get approved, get some momentum, it'll be, probably 3 or 4 weeks before we'll know whether or not the SEC is going to punt these things and delay. If they delay, then that's probably not a good sign, but it'll be interesting to see if they approve BlackRock right away. If they do, that'll be bullish momentum. And I think the crypto market can start a real sustainable move if that happens. And if it does get approved, it looks like it's going to be 6 months plus or minus to a year before it's even a tradable event. So interesting times that all of this is running up into the halving. And then we know what happens after the halving historically. But the other thing is we still have economic uncertainty. So the question is, how is all that going to play out in the second half of the year? So these are the things I'm looking at. I'll see you in the next video.